And Chandan Taparia as well is on the show with us. Kunal, what's the reading looking at the index? Does it seem like there's going to be some continuation of stability?
Yeah, there should be a couple of days of more stability for the indices. The only aspect positive about the markets today is that you have the sectoral front where you've seen the bank Nifty making a very strong comeback, and it's playing a very strong balanced effect to the underperformance of the Nifty IT index. I think that's a stronger part about the markets in terms of the sectoral composition. On the Nifty front, the only concern is that we've not yet broken past about the yesterday's high for the index. In an ideal scenario, when the index gets into a bounce back, we expect that the index would at least break past about 1 day prior swing high, but we've not yet given a confirmation of that. But just because of the sectoral balances, I would believe that potentially over the next couple of days, you should probably expect the index to get into a very mild kind of an uptick, and 26,000 as a support level. I think that should broadly hold for the index over the next couple of days.
Okay, we'll wait by and see whether we hold on to those levels or not. Today, at least, the mid-cap index in the broader markets are recovering too, and the Bank Nifty is also showing good amount of strength. Chandan, would you say that we're out of the woods when it comes to the Bank Nifty?
Yeah, good afternoon, thanks. So Bank Nifty has seen a decent recovery, but the problem is the follow buying activities. In fact, we have noticed that Nifty recovered till 23,250 marks, but follow-up is missing, and again index corrected by 100 points from its higher levels. Similarly, Bank Nifty recently broken the key support of 50,000, and it was respecting well its rising channel on the weekly scale from last 2.5 years. But after breaking that, the follow-up is required. It needs to hold beyond 49,000, then only the stability will be baked. But yes, supports are there, so we have to be in a broader range. So I believe that 47,500 to 49,000 or 49,500 would be the probable range. We can play some bounce back move, but again, one need to keep in mind that bounce will be only short-lived, or it may be the dead cat.
Sure, makes sense. Sampath, hi, afternoon. What's your reading of the market? You think much of the global and domestic parameters are in the price, or do you think there could be some more, downticks in the days to come?
It is a little difficult to say how the excess valuation that are there in the mid and small cap segments will be readjusted. Even with the yesterday's fall or the last few days fall, mid and small cap companies, I think broader valuations of that segment as such, still on the higher side. Whether it will be a prolonged time correction or an accelerated growth in earnings, which way it will lead to the bring the overall multiples of the mid and small cap segments is difficult to say. But I think at this point of time, with whatever the correction that we had seen so far, I think large cap segment looks very, very attractive. The valuations are now, most of the large cap segments are, quite attractive. And within that, especially the banking as such, is looking, much more attractive as a sector wise. So it is, I don't think, mid and small cap sectors, the worst is over. I don't think the valuations have come to a very, attractive levels there. They're still, I think, elevated as compared to its own historical, valuations, and also even otherwise, to get paid about 12-13% kind of an IRR over the next 3 to 4 years. I think mid and small cap companies are not priced for that yet. So we have some more paint left, I think, in the mid and small cap companies.
A bit more perhaps correction in the broader markets, though financials look attractive. But what within financials, Sampath, would you bet on? Is it NBFCs? Is it vehicle financiers? Is it home, loan providers? Is it PSU banks, large private banks? Which vertical would you rather be more positive on?
At this juncture, where the credit cycle is evolving, we had already seen in the Q2, the MFI as a segment had seen elevated delinquencies, asset quality getting deteriorated. At this juncture, I think we would prefer to stay with the large private sector banks. They are pretty much priced very well, and for a 12 to 14% kind of a return, these banks are quite attractive with those kind of expected returns. Mid and small cap banks or NBFCs, or some of the affordable housing kind of lenders, etc. They may have a potential to give a much bigger returns, but I think the risks are also higher there. Within the overall lending space, at this juncture, we would prefer to stick to the larger private sector banks as compared to the other NBFCs and other lenders.
Interesting. Kunal, on the charts, what is your take on the entire financial space? And, you know, this is NBFCs, private banks, PSBs, all alike. What's looking like a good buy and where you feel the selling could be overdone?
So on the banking side, I think ICICI Bank could be amongst the first ones to try and make a strong comeback. From the mid cap end, Federal Bank is also something which has been fairly less volatile. I would not say stable, but fairly less volatile as compared to rest of the other private sector banking names. So these are the top two names from the banking side and the private sector names. Then you have Bajaj Finance, which is looking attractive in terms of the NBFC pocket. That's a stock which I think, if I'm not wrong, is just 100 points shy of its previous multi-week breakout, just about that 7,500 odd mark. So that's a chart which is looking attractive. Then from the contra space, if someone is looking at a contrarian buy, then I would believe Shriram Finance at current levels is something which looks fairly attractive. Then you have L&T Finance, which I think around this 130, 140 range is also looking more into a deep oversold territory at current levels, where the indicators, the RSIs are almost single digit for the stock on the short term chart. So I think these could be few stocks which one could look out for.
Okay, but there is definitely quite a bit of momentum when it comes to the Adani group of stocks. I mean, take a look at Adani Power, that has been doing well, Adani Green, Adani Transmission, even Enterprises, Gas for that matter, all of these stocks are fired up. And suddenly some of these PSU names and the mid-cap banking names are doing quite well. So in IOB, up 18%, Central Bank up 18%, IDBI, UCO Bank, they're up anywhere between 15 to 18%. Even Bank of Maharashtra, for that matter, is up around 10 to 18%. In terms of, take a look at that. Maybe there is just this stake sale in 5 PSBs, which is actually causing that bit of excitement, because all of those 5 names are something which is actually doing well. So the government may allow the stake sale in 5 PSU banks, and that's exactly the kind of reaction that we are seeing, that maybe if there is a, external party that does come over, will the efficiencies actually increase, and they will do the QIP, which means that they will have more, of course, headroom available to lend more and grow more. So it's a developing story that we are tracking at this point of time, and all of these stocks are actually reacting. If I can quickly come to you, Kunal, as far as the charts of these 4-5 companies are concerned, because they have shot up, is there any name that you would still buy after the kind of big upticks that we're seeing?
I think IDBI could be a good bet at current levels. The stock has fairly been a lot more positive and buoyant over the last 2.5 odd years. I've also been tracking Bank of Maharashtra. That's another chart which has been very strong on the longer term basis. I think there was a point when the stock was almost at single digits, 8 or 9 rupees, moved up to 70 or 75 thereabouts, and now has corrected back towards 45-50 range. So that's another chart which is looking attractive. So very few selective pockets from this smaller cap PSU banking names where I would probably bet on.
Okay, point taken. That's something to watch out for. Just trying to track as to what the current holding of some of these, banks are. Just give me a moment. I'll quickly check that, because just wanted to understand what the reason is of the same. Is it in terms of getting the, efficiencies into these banks and the privatization, or is it just coming in from the sense of, kind of getting the public ownership, the minimum public ownership norms in place? Just give me a moment. I'll quickly track that, because all of these stocks are reacting quite heavily at this point of time. So what the street is trying to bake in will be important from that point of view. The system can't really figure that out, because, okay, found it. For at least Central Bank, it's 93%. So it is possible that for some of these companies, it's just in order to bring in the lower levels of, because the public sector, the public entities, listed entities need to have at least 75% of only 75% can be held by a single entity. So maybe from 93% it's expected to come down, and that's the reason some of these stocks are reacting. But there's another news flow that is hitting the screen, and that's on HDFC AMC, wherein the revenue growth has been around 5% quarter on quarter. I just saw an initial uptick on the stock. We'll have to wait by and see what to really make of these numbers, because sequentially there's a decent amount of growth on EBITDA. It's single digit, but at least higher single digit at that, 8.6% on EBITDA. The margins have improved on a sequential basis. It stands at 81.7% versus 79.3%. So there has been a bit of an improvement. We'll have to, of course, confirm it with as to what the street expectations were, because on the profitability basis as well, Aisha, it's a 11% sequential growth. So standalone doesn't look bad, but we'll have to figure it out what the expectations were.
Yeah, exactly. But yeah, that's the hot space, right? That's something that the market has liked for a while. And, time and again, it has been proven. The entire AMC pack, the listed players have been doing good. And HDFC AMC, one among amongst them, 1.25% higher. But let's just wait by and get in more details of the earnings. But Sampath, what is it that you're making of this entire capital market theme? Because it's believed to be a structural, story with many a kind of variety that you can find within the listed universe right now.
Right. I think, yeah, that is true. Overall, the entire capital market plays have done exceptionally well. And thanks to the kind of a growth that we have seen in the overall investor base that's rising. And the mutual fund companies continues to attract a huge amount of SIP flows. And also the overall, last 4-5 years, the trading volumes, especially the post-COVID, the trading volumes have also shot up a lot. So entire value chain within the capital marketplace, whether it is a depositories, whether it is the exchanges, whether it is a wealth managers, whether it's the AMCs, whether it's a brokerage companies. I think, last quarter, by and large, most of them had seen about 40% growth in earnings. I think this quarter also, YOY, you could see a 30 to 40% growth in earnings for this capital marketplace. So far, I think, they've been doing quite well. And also all of these companies are, have a huge operating leverage. Return on capital employed is exceptionally good. So, these are the sectors. This segment continues to do well. Even the, RTS, whether it's CAMS and Care FinTech, these are the companies which have been doing quite well in terms of profit growth for the last 3 years. I think valuations are also quite stretched. But, on the flip side, one has to be careful just in case if the markets were to be turned a little bit bearish, they will also see, degrowth in earnings as well. So one has to see a little bit, valuations in that context, where if the volumes were to come down, so all of them will see a, decline in earnings also at a faster pace.